The UK financial year just reset, and when it comes to your personal finances, this should be a really important checkpoint that you have marked out. One of the key things that happens at the start of each financial year is that your tax-free allowance resets, and this is a great time to think about how best to use your tax-free allowance this financial year. If you live in the UK and you're serious about building wealth, then ISA accounts are a must-have, and they should be absolutely fundamental in your wealth building plan. And that's what this video is all about. I'm going to explain to you what are ISA accounts, the different types of ISA accounts that are available, and I'm going to round out by talking about how I would use each different type of ISA and how I would use my ISA allowance. So let's get right into the video, guys. Welcome to Millennials with Money. My name is Johnny. So ISA stands for Individual Savings Account, and it is a type of account where you can place your money or place your investments and you will generate returns that you don't have any tax obligations on. The financial year in the UK runs from the 6th of April to the 5th of April the following year, and the UK government will give you an allowance that you can invest or save, and any income that you make, any capital gains, any dividends, any interest you receive, you don't have any tax obligations on that. It is tax-free. And at the moment, that threshold is set at £20,000 per tax year. As I said before, if you're serious about building wealth, then you should absolutely take advantage of the benefits of ISA savings and investing. Remember, the goal when building wealth is to maximize your returns, and part of that is optimizing your tax strategy. So here you've got a legal, tax efficient way of optimizing the returns on your investment. That means you have more money left over that you can then reinvest, and you can use it to build more wealth and build wealth quicker. So who can open an ISA? It really depends on what type of ISA you're opening. We'll get into the different types of ISA just a bit later, but just so you have the requirements for being able to open an ISA, you need to be at least 16 years old to open a cash ISA, 18 years old to be able to open a stocks and shares or innovative finance ISA, and you need to be between the ages of 18 and 40, that's to say no older than 39, to open a lifetime ISA. If you're a parent and you want to invest or save some money for your children, then you can do so through a junior ISA, which has an allowance of £9,000 per tax year that your children can access when they turn 18. Another important eligibility criteria is that you have to be a UK resident or Crown Civil Service to be eligible. So even though I'm a British citizen, I can't open an ISA from living in Spain. However, I do have a cash ISA which is in the UK that I opened several years ago, and any interest that I generate on that is still exempt from tax. So if you do move abroad during a UK tax year, then you will be able to continue to pay in for the remainder of that tax year, but not in the following tax years after that. But you will be able to continue if you return to the UK one day. Also important for people living abroad with ISAs is that though there are no tax obligations on your ISA allowance in the UK, depending on where you live, you may still have tax obligations on that. In Spain, for example, I do have to pay interest on my ISA allowance in the UK, so something to keep in mind. Now let me go through the different types of ISAs and tell you a bit about each one. So first of all, we have a cash ISA. You can think of this as your standard savings account. You know, put your money in the bank, they all give you some interest on it, and you don't pay tax on that interest. You can open a cash ISA at most banks in the UK, but beware, the interest rates aren't that great. And remember, if you're keeping your money there and the interest is lower than the rate of inflation, then your money is actually losing value over time. For that reason, I would keep my use of a cash ISA generally quite limited, which I will explain a bit later on in the video. Next, you got your stocks and shares ISAs. So if you're an investor and you invest in the stock market, in ETFs, in bonds, for example, then you can open a stocks and shares ISA and you can put your investments in there. And any capital gains, any dividends that you receive, again, no tax obligations whatsoever within that ISA. And this is not just limited to UK assets. You can invest in European companies, US bonds or companies, for example, so long as your broker or the provider of your ISA can give you access to it. And similarly with ETFs, you can invest in ETFs that track other markets that are available in other countries, so long as they are available to UK-based clients. Remember though that in the same way that I have tax obligations in Spain on my ISA allowance in the UK, if you receive dividends from, let's take a Dutch company for example, then there may be tax obligations on that, that are probably actually withheld once the dividend is paid, but the ISA will not shield you from that. So again, something to keep in mind. Some of the popular providers of stocks and shares ISAs include Vanguard, AJ Bell, Hargreaves Lansdown, but some of these digital investing platforms such as Trading 212 and Free Trade are also getting into the game and offering ISA accounts through their platforms to UK-based customers. Next, you've got innovative finance ISAs. Now, these typically pertain to peer-to-peer lending and debt-based crowdfunding. So your interest that you would earn on loaning that money out, again, tax-free. To find an innovative finance ISA provider, you probably need to go to one of these peer-to-peer lending platforms, though I have seen a couple of UK banks that are offering them as well. And finally, we've got the lifetime ISA, which is a little bit particular. So within that £20,000 ISA allowance, you can contribute up to £4,000 only into a lifetime ISA, but there is a big bonus that comes with it, and that is that the government will add on 25%, you heard me right, yeah, 25% to whatever you've contributed. So if you max out that £4,000 contribution in a year, then the government will add on £1,000 to you. That's crazy good free money, right? But there are some strict conditions to adhere to when it comes to that lifetime ISA. As I mentioned earlier in the video, you do need to be between the age of 18 and 40 years old. Once you're 40 years old, you can't open a new lifetime ISA, but you can continue to contribute to an existing lifetime ISA up until the age of 50. There are then two specific circumstances under which you can withdraw money from a lifetime ISA. One is for the purchase of your first home or a first property, and the second is when you reach the age of 60 with the idea that it funds your retirement. Anything that is not one of these two circumstances will incur a 20% penalty. And then a couple of popular lifetime ISA providers include AJ Bell, Hargreaves Lansdown, and Nutmeg. So now I'm going to talk to you a bit about the considerations of how best you can optimize your ISA allowance. What I'm about to tell you is if I went back to the UK, if I had an ISA allowance, how I would probably use it. First of all, £20,000 is a lot of money. You've got to go in with a wealth building mindset. How best can you use this to build your wealth and optimize the return on your investments? You got to think of it as a wealth building tool. You don't just have to put it in one type of ISA. You can split it across multiple or even all four of them, but you can only open one of each type each tax year. So for example, you could only open one stocks and shares ISA within a tax year. If you wanted to open another one, you'd have to wait until the following tax year. Do remember as well that per institution, per bank, per broker that you have your money with, the Financial Services Compensation Scheme in the UK has you insured up to £85,000. So with a particular broker, with a particular bank, for example, if you notice you're getting close to that £85,000, then you might want to think about opening another account with a new broker or a new bank in the following tax year, just to optimize the spread out of your money and to make sure your money is an ultimate safety. Now let's talk about how I would use each type of ISA. So a cash ISA, I would use it as an emergency fund. You know, I can put 3 to 6 months of expenses in there. I'll generate a little bit of interest, not a lot, but the amount that I'm putting in there, the reason that the money is going to be in there, then it doesn't really matter too much. That way I have easy access to my money and it's somewhat keeping pace with inflation. But once that emergency fund is built, I would leave that cash ISA alone. I wouldn't touch it. I wouldn't put any more money into it because that money can be used much more efficiently elsewhere in the lifetime ISA or in the stocks and shares or innovative finance ISA. So out of the remaining three types, if you're actively saving for your first home or your first property, or if you're actively trying to contribute towards your retirement, then I would say prioritize maxing out the lifetime ISA next. Max out that 4K, go secure the bag, get that free grant from the government, and let that money build. Remember though that because the access you have to that money is restricted to specific circumstances, make sure that it's not money that you need in the short or the medium term. Also, I would say if you're going to be outside of the UK for a long time, whether that's work or living abroad, or if you're not really trying to buy a property in the UK, then probably skip over this. But I would imagine that the majority of people watching the video are living in the UK and do want to buy a house in the UK or do want to retire in the UK. So in most cases, I would say put the lifetime ISA as your second priority once your emergency fund is built up. With the remaining allowance after the emergency fund and the lifetime ISA, if applicable to you, then it absolutely makes sense to max out the remainder of your allowance on stocks and shares ISA or an innovative finance ISA. In my case, it would be a stocks and shares ISA. If your investing contributions for that tax year are less than or equal to your remaining allowance, then absolutely makes sense to just go all in, put it in the ISA, and any dividends and capital gains you get are tax-free, and that is the most efficient way to optimize your investments. If, however, you are going to invest more than your remaining allowance, then you need to start thinking about what the tax rates are on capital gains and dividends outside of an ISA. So typically, capital gains that are not property related in the UK are taxed at 20%, and dividend tax rates will really depend on your income bracket. Depending on where you fall, it could be 7.5%, 32%, or 38%. So let's say, for example, you fall into the lower bracket, and for dividends, you would be taxed at 7.5%. In this case, if I had any high growth companies, maybe something like an Amazon or a Tesla, then I might want to put it inside the ISA because that would give me the most beneficial tax rate, and I would only be taxed 7.5% on my dividends. However, if I hit the higher tax bracket and I was going to be taxed at 38% on my dividends, then it would absolutely make sense to put dividend paying stocks within the ISA and then put the higher growth stocks outside, because you'd much rather pay 20% on a really high growth stock than pay 38% on a recurring bit of income from dividends, right? What I've just explained to you there is my way, how I would do it. Remember, there is no one shoe fits all. It will very much depend on your personal circumstances, how you use your ISA allowance, but absolutely key thing to keep in mind is how can you optimize building your wealth through an ISA. So I hope that you now see how powerful of a tool your ISA allowance is in building wealth, and I hope that some of the explanations, some of the ideas I've given here have been useful to you and will help you when thinking about how to optimize your ISA allowance this tax year. I'd love to know how you're planning to use your ISA allowance this year, so leave a comment on the video and let me know. Also, if you're new to the channel, you're not yet subscribed and you want to see more videos like this, then hit that subscribe button and turn on the notification bell so that you don't miss a single update. I'll see you on the next one, and let's get this money.